Hey, good afternoon, everyone. My name is Ben Lafort. I'm OFA's economist within our policy research group. Very happy to be introducing our two guest speakers today from Cooperators. First, I will introduce Ben Eastman, who has given similar presentations to us in the past. Um, Pardon me, Ben, just pulling up your bio here, looking for it. Um, Oh boy, I just had it. Sorry, appreciate that. Apologies for that. Yeah, sorry. So Ben Eastman, previously the senior firm consultant for Cooperators. Ben is a 15-year insurance professional holding his fellowship chartered insurance professional designation. He grew up in North Gower, Ontario, on a dairy and cash crop operation that his parents continue to manage today. And he's located in Bowmanville, Ontario, where he resides with his wife Sarah and two daughters, Maddie and Aria. And I will also introduce Caitlin Pierce, who is with Cooperators as well. Caitlin Pierce currently lives in North Vancouver, BC. She just moved there 2 months ago from her hometown in Swift Current, Saskatchewan. She started her journey with Cooperators back in 2017, working for a local agency. And she started off selling farm, home, and commercial auto insurance. After a few years in the office, she became the farm insurance portfolio manager and was one of the top producers in the West. In 2025, an opportunity came up internally with Cooperators for the national senior farm consultant position. She has been in this role since May when Caitlin is not working. She enjoys road trips with her boyfriend in the mountains and hikes with her chocolate lab, Remy. So thank you so much to Ben and Caitlin for providing this presentation today. And without any further ado, I will throw it over to the two of you.
Awesome. Thanks, Ben.
Thanks,
Appreciate
Ben.
it. Good morning, everyone. Good afternoon. It's morning for our friend Caitlin Pierce joining us here from North Vancouver. So appreciate her jumping on the call. Done these presentations in the past, so a few housekeeping items, case specific, individual circumstance stuff. If you have those challenges, questions, opportunities you want to talk about it, please don't hesitate to reach out to either myself or Caitlin via email. We'll provide that detail and that contact information in the chat. Ask your questions in the chat. We're happy to answer as many questions as we possibly can. We do have a presentation, so some of those questions you may see us answering in the chat as we get rolling. I'm here to support Caitlin from a licensing perspective, so I'll be the one answering your questions. But Caitlin is our new national farm consultant here at the Cooperators, comes with a wealth of experience in our Western provinces, and really excited to have her in the chair and moving forward with the organization and supporting our members of the Ontario Federation as well. So looking forward to these continuing. Thanks for having us, Ben and Joanne. Really excited to get in front of the group. Our family is a member of the OFA organization and big advocate for the work they do for our Ontario farmers. So we're going to talk to you today about some insurance coverages. I'm going to turn it over to Caitlin. She's going to walk you through some coverages. I'm going to be manning the chat. We're going to turn off our cameras just in the interest of bandwidth, because I can appreciate some of you coming from rural connections may have some challenges with the video and audio piece together. We'll turn those off. We just want to let you know we're human beings. We're here. We're happy to answer the questions, and we're looking forward to getting underway. So I'll man the presentation. I'll turn it over to Caitlin.
Awesome. Thanks, Ben. So today we're going to talk a little bit about understanding your insurance coverages. These are just a few things to consider. What you might typically see under a general farm insurance policy. So they will be, you might require some different coverages depending on your farming operation. These are just going to be what you typically would see covered, some perils that you might consider in addition to those that are generally covered. So typically with a policy, you'll have your basic coverages, your main coverages, but again, case by case, you might need additional coverages, you might need higher limits. So these are just a few things that we'll go over today, as well as things you might not typically see covered on a general farm insurance policy. Some of the things to be aware of on your policy. So we are going to chat a little bit about liability. Typically, every policy you see, whether it is farm, home, commercial, you will see liability on that. limits are, again, kind of case by case specific, but liability is to protect you from injury or damages that you may cause to others or their property. So it's not going to be damage to your property. It will be, this is a third party coverage. Some property that you might see covered on your policy, machinery, livestock, whether it's cattle, horses, poultry, produce that follows with that, structures, dwellings, and these are just to name a few. Included in machinery as well, we have tools, we have tack that comes along with horses. So there will be some extras in there as well, not listed, but these are the main five that you'll see on a farm insurance policy. Loss of income coverage is a big one there. So that protects your income in event that you suffer a loss due to an insured peril. And that's kind of the key there. It does have to be due to an insured peril. A few of these would be your fire, wind, collapse, and equipment breakdown. So that is a big one to discuss with your insurance advisor to determine if you require the coverage and to what limit. And then there will be some other coverages as well. You might see your pollution. I know this is one that we've kind of seen more common coming up in the last couple of years. Loss of use for machinery is another big one as well. And again, as I mentioned, other extensions for tools, horse tack. So yeah, just to make sure you do review your limits with your insurance advisor. Make sure the coverage that you have is adequate for your belongings. So your farm liability policy is covering your actions as a farmer in raising your livestock or producing crops. So a big one here, if you are doing more than just that, that is something that, again, you should review with your insurance advisor. Sales at farmers markets are covered, but when the manufacturing process starts, that is when you might require further coverages. That's when you get into potentially needing commercial policies as well. So it is a good idea to let your insurance advisor know all of your operations that you are doing at the farm so they can make sure that you're covered properly, and if we're your insurer of choice, that we're doing the same. So yeah, it's something to review and be mindful of. And yeah, there is your bodily injury, of course, as well under your farm liability. So again, this is your third party damage to others or others' property as well. And I think that's it for me. I will hand it over to Ben to kind of go through the rest of it for you there. Again, thanks for having us. And yeah.
Awesome. Thanks, Caitlin. So Caitlin and I are both battling through some colds here, folks. I appreciate some patience on our voices as we try and haul in some water and cough drops between conversations. I'm going to walk you through the next components here. That is due to my license in the province of Ontario. Really excited about what we can present here today. Main peril. So for structures, we're not going to talk about the dwellings. We're not going to talk about some of the other features of the policy. These are the key ones that we've identified as the conversation piece for today. The big main perils that we see here at cooperators and our clients needing: fire, wind, impact of aircraft or land vehicles. So that could be a tractor, that could be a car, that could be a helicopter, that could be anything that fits that description. Theft. We know that we had some of those challenges. I know fuel theft was a large exposure for a number of our rural communities throughout the course of the pandemic and thereafter. So we're happy to see some of that go down. A little bit more of a traditional loss cycle here. The biggest two, fire and wind. And in the province of Ontario, the number one cause of loss is wind. That could be, we've seen derechos, we've seen tornadoes, we've seen some very increased velocity winds, especially through probably that Windsor to London stretch, as well as the Eastern Ontario marketplace. So something to be mindful of. Wind is included on the majority of farm policies. keep in mind that that is the number one cause of loss, the most frequent one. The biggest severity piece is fire, but we've seen some really great prevention devices come into the market space to help identify that electrical infrastructure loss. So if you're not working with one of those ones that use our farm is a PrevTech farm. Love the PrevTech device and the just the peace of mind it creates for our family. So if you haven't investigated those options, something out there that can help prevent loss. Theft, vandalism, malicious acts, that's somebody coming onto your property causing damage, smoke, hail. Thankfully, we do not have the hail issue in Ontario that to the extent that we have it in some of our western provinces. Lightning, explosion, falling object, as well as water escape. So water escape isn't flood; it's really for that internal. That could be a rupture, a frozen pipe. Generally, we don't see too many of those losses just due to the nature of the operations, as well as the temperature these locations are kept at with animals inside. So don't see a whole ton of those. The two biggest ones in terms of losses are generally wind, in terms of frequency, the frequency in which it happens, and then severity is fire. We do see some impact. Obviously, during harvest time and planting time, we do see some tractors and things end up in ditches, combines get hit by other cars, things of that nature. And that's what you're buying that insurance policy for. I see a question here, Melanie, transportation of product. Yeah, so generally the produce, we'll talk a little bit about produce. A great question, Melanie. Produce does have coverage available for transportation when you buy coverage for your produce or for your goods that you're soliciting. Sometimes you may need a commercial policy to depending on the extent of your sales or depending on who you're selling it to or where you're selling it. But let's say you're having I'll use tomatoes, Suntec tomatoes there in Manitouk, Ontario comes to mind. You're taking your tomatoes and you're selling them at the local market. You can buy coverage for the tomatoes, but if it's in an automobile and you're looking for other coverage, that's generally going to come under your auto insurance here in the province of Ontario. So I'll keep going here. The good question. If you have those, I'll answer them on the fly. If it makes sense to, I may delay you until we get past a section where we do talk about it. The other things that should consider, so collapse of building. So this is your snow load coverage. This is the collapse that happens in the event that snow accumulates on the roof of a building and takes down. Generally, you see a corner, it pivots, the building falls down, it results in damage. What snow load doesn't cover is snow slide, and snow slide is when snow accumulates on a higher peak and then slides down onto an adjacent roof. We've seen this, and we saw it. We saw it quite a bit here over the course of the last 8 or 9 months, specifically in central Ontario with a number of providers. But the snow accumulates. It happens on the 40 or 50 foot roof from the older barn, I'd say the old bank barn. There's a new addition to an adjacent building that is running either perpendicular or parallel to that roof. The snow slides off the roof from the larger building onto the lower building, and that building then either suffers a puncture, a penetration of the snow, or a collapse, depending on the volume and weight of that snow. That is generally not covered under insurance policies. So something to be mindful of, something to review with your insurance provider. What does this cover? What does this not cover? It's also known, you can see broad form insurance that generally does not provide coverage for snow slide. It'll provide coverage for collapse of building. Something to be mindful of. So question here, does this apply to hoop house buildings? It depends. Every coverage level within your farm policy can be unique to your farm, unique to the structure, unique to the occupancy, unique to the age. Every organization, whether it's cooperators or our wonderful local mutuals that support our communities, they all have different underwriting guidelines, appetite, and conditions in which coverages can be purchased or not available. So something to be mindful of when you're working with your insurance professional and you're sitting down and reviewing that coverage. We talked about this on some other of these OFA type calls, is have that review plan. Have that conversation around, what does this cover? What are my expectations? What are you expecting as a client? And have that conversation with your insurance professional. As I expect this to be covered. I expect this to be covered, and we can build a solution as a team and as a partner. Not sure what the 80/20 rule means. Sorry, I don't. Shayla. If you want to exemplar, add a little bit more detail to
My
what that,
name is Sheila,
Sheila?
and I had hoop house coverage, but when it collapsed in Simcoe in February, I was told that I had to pay 80% of the costs, and the insurance company was only responsible for 20%. And if they called it the 80-20 rule. That's why I'm asking. I would have assumed that they would have come in and cleaned up the mess and replaced it.
So
But
good
that didn't
question.
happen.
So the individual ones, what I might do, Sheila, is ask, like, we'll connect offline on the specific circumstance. But the co-insurance might have been in place there. So co-insurance is the result of the did versus should. Did you insure to 100% of the value of that structure? So we've talked about co-insurance, and there is a recording available, and I do get to it a little bit later in this presentation. But I do want to have that conversation. That might be a more specific individual circumstance. So co-insurance is applied to every single policy, but we'll talk a little bit about it later in this presentation. So I'll just put a pin on that one.
Thank you very
Um,
much.
very welcome. Loss of income. So the other one here is loss of income specific to the structure in which you are deriving your revenue, your income. For those of you who are dairy farmers, that's your dairy barn. That is where you're milking cattle, putting the milk in the milk tank. If that building goes down, are you able to replicate your income? Probably not. Now, there could be circumstances in which you generate some income from another form. You're going to want that loss of income coverage. No different for our poultry or hog providers. And some of you who are generating income from renting your bins out or storing grain for others, that needs to be considered in your calculation when you're going through your insurance policy. Do I have coverage for a structure that replaces income to replace that income? That's, again, have that conversation. Those are additional coverages. They don't come in a general package format or with the addition of an insured building. It is an additional coverage that you want to look at and investigate whether it makes sense to you or not. And again, the nice thing about our farm solutions here in the province of Ontario, they're very customizable across all of the providers who provide coverage. Again, we're fortunate to have a very diversified provider group, whether that's a local mutual or the cooperators. It's created a lot of really healthy competition, and some really great solutions exist for our Ontario farmers. Um, so loss of income loss of income covers the income. So loss of income covers the income. The building and pipeline involved, that could be insured under your structure coverage. It could be insured under your contents coverage or equipment coverage, depending on how your provider is rating for it, Jules. That's a conversation. Again, I direct you back to your insurance professional. This is what we're trying to insure. This is what it does. Do we have coverage? And what does that coverage level look like? What perils, the causes of loss, would we be covered for? Yeah, and Alice hits the nail on the head. Might be referred to as business interruption. Same coverage, very similar coverage. Make sure you're reviewing that with your professional and understand what is the term. The period of indemnity comes up in this coverage. That's the length of time that the payments will be made. For those of you who are in specialized operations, hog, poultry, dairy, I'd be recommending 18 months to start, depending on season, depending on construction professionals available, depending on what you're trying to build. 18 months gives you some runway to make some decisions and it gives you some flexibility, is where I'll go with it. For those of you running larger operations, you're doing 150 head, or you got 10, 15, 20,000 birds or hogs, you might want to start considering that 24-month period just before the revenue stabilizes. So something to be mindful of. Equipment breakdown, something that we recommend on all operations, especially with the electrical capacities increasing across farming operations in the province. We are seeing, it's not unusual to have a lot of these cash crop operations have a dryer on premises, to have 400 to 800 amps running through that location. Dairy barns are getting bigger, more sophisticated. There's more technology, more power required to power that technology. That's a big one that we see. Arcing, electrical surge, not unusual. We had a surge on our farm, fired over the pole switch, and it fried. I think Mom is still finding things in the house that are fried from the surge that juiced the dwelling. So equipment breakdown is something to consider. It happens a lot more than it did, and that is generally just due to the amount of power that these operations are generating, especially if you're operating again in a poultry, dairy, hog scenario where you're adding a little bit more automation, you're adding some more capacity, something to be mindful of as we're looking through your options. So there are a couple questions here. Yes, Estelle, this is recorded. If you do have to jump off, I appreciate that it is the end of October and there may be other things calling your name today. So this will be recorded and placed on the OFA YouTube channel in the event that you do have to step out. There's another one here. Do you need farm insurance if I live on acreage and rent land out to a farmer? Always recommend that you carry some sort of liability insurance to protect you in the event that somebody comes onto your property because you are still the owner, Paul. And you could be subject to a lawsuit in the event that somebody trespasses or comes onto the property, slips and falls and injures themselves, or is, we've seen it with snowmobiles over the years where there's a third party who gets injured on premises. Not so much for the claim, but more so that you want the defense costs, right? Because those can be, $5,000-$10,000. We had a lawsuit one time with one of our clients. They had a light on the above their barn, as I would say 100% of all farms have here to highlight over the driveway. There was a single vehicle accident on the road about a kilometer and a half away. They then filed a lawsuit against our farm client for allurement. They said that the light caused them to crash their vehicle into the ditch. So something to be mindful of. It was the claim, it went to court, it was thrown out, but there's a defense cost there that Cooperators is able to meet, or any farm insurance provider with your liability coverage. So we'll keep moving through this. Again, great questions. If you have them, happy to answer them. Heat prostration. So that's coverage in the event that your barn heats up and your animals asphyxiate. We've seen that climate change continues to challenge the temperature in which we do business in. We had a large run on these as an organization, and not just us in British Columbia, but a number of insurers in the British Columbia, especially in the valley. We saw heat temperatures raise 42, 45 for 7 to 10 days. No matter how hard you're turning the fans or opening the curtains or doing whatever, there's sometimes you just can't stop the heat. So something to consider, especially that's a poultry and hog specific coverage, something to be mindful of. Power interruption, another one that we see, especially with the capacity loads going through there and some of the automation that exists, the fans turning on at certain temperatures, the curtains opening up at certain temperatures or closing at certain temperatures. The thing to I'd say, be mindful of is that these two endorsements or additional coverages, there's some conditions inside them that are required to achieve payout. And some of that is a 30-day test on the system, a full systematic, test. It's keeping logs, it's performing regular maintenance. So make sure that you're reviewing those conditions with your insurance professionals in the event that you're working in that hog or poultry space to understand what those conditions might be and what might be required to ensure that payout is met, and making sure that you have those limits. Pollution, we do have a couple of pollution offers that we see across the market space. I'll talk specifically about first party. First party is loss to your property, which would be either a land and water cleanup, a pollution cleanup type coverage. So that would be in the event that you have a fuel tank on premises, the fuel tank either leaks or is left on, or something happens and it causes environmental damage to the property you own. That is first party coverage. There are multiple solutions that exist in the marketplace. They can provide up to $5 or $10 million in coverage if you need that environmental piece. The environmental piece can get very expensive. It is an absolute liability situation in the event that you do have a pollution exposure and a pollution loss. So it's something to consider. The big one that we do see in the one that does, I think makes us a little bit more nervous at the insurance level is the third party loss. That's your limited pollution liability. That's in the event that you're driving down the road, tractor gets in an accident, and fuel leaks into the ditch. That could be a third party loss. It could be that you have your fuel tank on the property, and in the event that it leaks and comes down the driveway and it hits the ditch, there's going to be some carbon discovery done. They're going to dig up the ditch, and there's going to be some cost for that. Couple questions here. Yeah, great question, Tom. So we're really excited about the Agritourism Act and some of the limitations it puts on the lawsuits that can come for our farm clients, especially those of you participating in agritourism. Insurance is a historical based decision making process. So we're hopeful that we'll see the end of longer tail liability bodily injury claims that we were seeing in that space as an industry. So that's an industry challenge. Um, People were getting injured. 22 months later, a lawsuit would come for a shattered ankle, a head injury, a child who was bit by a goat, or whatever was going on. The act does limit some of those timelines and where a claim must be filed. We won't see the benefits of that act on the historical results of the insurance premiums probably for 12 to 24 months. And that's just due to the natural rating and actuarial processes of insurance companies across the country. So I'm hoping it gets better. I think it's the right step. I think we're seeing a lot of really great things in terms of setting proper regulations. It's going to take some time to unfold and for our clients and our farmers to realize the benefits of those changes to the regulatory and litigious nature of some of those claims. So it doesn't really answer your question. We're not going to see it tomorrow. We're keeping an eye on it. It's something I know all insurance providers in the province of Ontario are keeping an eye on, and really excited to hopefully mitigate some of those losses and just the challenges, right? Because it's not so much the loss; it's the defense that comes with that loss and the lawsuit that follows. So if you lose animals under hog prostration, could be, Jules. It all depends on the wordings and what the loss is. So I don't like to give that high level. It's a maybe. Review it with your insurance professional, and we can have that conversation around there are circumstances in which it might be or might not be. I don't think it'd be fair of me to say yes or no because depending on the coverages and the other triggers on your policy, there could be coverage afforded. Report to authority, coverage to kick in. Good question, Alice. I'll have to take that one away. I believe so because it would be a fine, right? Or they call it a fine, but it'd be the duty to defend. So I do believe that an action would have to be brought, or again, a loss would need to be reported to the environmental authority. So that's the Ministry of Environment on that one. But I will confirm that. 99% certain that it would have to be reported, but I will confirm and get back to the group with the answer on that. Those are the specific endorsements. So there's a couple more here. Talk about confusing things. We've kind of hit on the retail agritourism thing. I'll talk a little bit about that. Vehicles of husbandry. This is something that can, as long as I've been in insurance in the province of Ontario, so 15 years now, vehicles of husbandry continues to come up in conversations, whether it's with MTO or the local insurance provider or the clients. Vehicles of husbandry are deemed by the insurance provider. So if you are utilizing a vehicle of husbandry, you do want to make sure you're going back to that insurance provider to confirm that, hey, this is covered, this is what I have, this is what I'm using it for. It's a pig bus, or it might be a modified Apple wagon, whatever that situation is. There's lots of, I'd say, just ingenious creations on farms across the province. If it makes sense that they're a vehicle of husbandry, that has to be triangled under 40 kilometers an hour. Generally, insurers want to see them on side roads and not operating as a vehicle. Um, that generally will qualify you as a vehicle of husbandry. However, we do see circumstances in which it's a Kenworth. It needs to be safetied. It needs to be automobile plated. It should be on an auto policy. So if you have those operations where you have some vehicles of husbandry or you have some exposure, always go back and have that review with your insurance professional to determine, is this a vehicle of husbandry? Is this what we've identified it as? Do we have the? You want to make sure. We do see those involved in, I want to say accidents, but generally depending on the time of year. I know for the Niagara region, it's during apple and fruit harvest, and for the rest of the province, it generally falls into harvest season or hay season. So just have those conversations to make sure that those are properly protected. Flood insurance. So we talked about water. Flood insurance, unless it's on a dwelling, I'd say on a dwelling coverage, but flood does not generally extend to structures on the farm policy. Your animals may be able to obtain coverage for flood. Your farm machinery may be able to obtain coverage for flood, but the farm structures in this current market space and across the country, it's an emerging need for a national provider like cooperators. as well as many other insurance organizations. Flood is not a coverage that is offered at this point on farm structures within Canada. So it's just something to be mindful of. You might see water. Well, what does that mean? It doesn't mean flood. Retail and agritourism, see a lot of expansion in this space. Love to see. We head out to. I'm in Bowmanville, so we've got Maple Grove, we've got Watson's and Pingles, and some really awesome agritourism spots. My kid is at Pingles today, enjoying the pumpkin patch. So I don't know if Pingles owners on there, but fantastic to see the opportunities that are being realized by our farmers, generating additional revenue. Awesome. Love to see it. Just make sure you have the right coverage. Make sure you've got, if you're selling something, you're modifying a product, you're bringing something to market, fantastic. Have the conversation to make sure that you have the proper liability coverage, that your produce is covered, that you've got coverage for your equipment or your stands or whatever else you're using. There is not I would say it's not a high expense coverage for the retail piece. The agritourism, depending on what's going on, if you've got the pumpkin cannons or you've got corn mazes or playgrounds, those are all different types of exposures. We've seen the market start to partner more with those agritourism operations to help them find solutions. Biggest key to this space is try and find somebody who's going to work through it on a risk management perspective. We've had a number of clients who are looking at, hey, I want to build a playground. Okay, that's great. Here are the things that we'd want to see, and go to your insurance professional and your insurer, whether that's your cooperators or your local mutual. What would you guys want to see if I was thinking about doing this? The proactivity that can be had here really is going to allow some benefits, some flexibility, and just put you in a position to be successful where you're still able to find insurance that's affordable, that makes sense, and provides the coverage you need as a provider of those services. We want to be partners. I think the insurance industry is shifting away from that product-based solution to really a risk mitigation and management operation. Go and have a conversation with your local insurance professional. This is what I'm thinking of. We're not going to do it tomorrow. Might happen in the next couple of months. Might happen next year. This is what we're thinking of, and that can help put you in a position where you don't have the sticker shock of, oh, I just built this. I'll use playground because I see that frequently. My insurance premium is going to go up how much? Have those conversations and allow that planning process to unfold. And sometimes it's just like, we're not going to have an issue with that. Here are the things to consider when you do it. Oh, I can do that. That's not an issue. That puts you in a position to be successful and manage your premiums and ultimately put that capital back into your operation or into your pocket. Farmer employee injury. So we do get questions around this. WSIB is something that we have here in the province of Ontario, your workplace safety injury board. So that product, you're required to carry it for employees. In the event that you're a farmer, the farm insurance policy, depending on your provider, may have some very limited coverage for either a disability or I see some accidental death and dismemberment. I would always recommend, as an insurance professional who works with farmers, have a conversation with somebody about disability. It is a dangerous profession. I was just at home for Thanksgiving, and Dad had a dent in his head the size of a toonie. Asked him what he did. Oh, I caught it on the door coming under the tractor, going back to, I forget what he was attaching. He was either taking the baler off or putting something on, and things happen, right? We want to make sure that you have that protection. There is a cost that, but please have those conversations as a family and look to find a professional who can build a solution for you to make sure that in the event that you break your foot, you hurt your arm, you do something, that there is coverage there to protect you and your family operation. We see that a lot. There's some limited coverage that exists out in the marketplace, but really go and explore what that full solution looks like, because it's very affordable considering the level of coverage it provides. And there's a lot of really great providers here in the province of Ontario who can to meet those needs. The next one, I think that was your question earlier, Sheila, was the insuring the value. The co-insurance metric is available. It's used on every single insurance policy. It is that the payout, loss payable may be subject to review on the bottom of every insurance policy. What that is your requirement to insure to at least 80% of replacement cost in the event that you have a loss. So in the event that you don't meet that quote unquote 80% trigger mark, you will become a partner in the loss and then therefore subject to your proportional share. So I'll use the quick example of their building. it should be insured to $100,000. You choose to insure it to $50,000, and you have a loss for, let's say, $20,000. You have a roof loss or a wind loss or something happens, and you have a $20,000 loss. You're not going to receive $20,000 because you have 50,000. You should have insured to 100. You insured to 50. You are now a 50% partner in that loss because you didn't meet the requirement of 80%. So you have a 50% partner on the loss with your insurer. The loss is $20,000. You are going to receive 50% less your deductible. So if some of you have a $5,000, $10,000 deductible, you may not realize any benefit from making a claim. So that insurance to value piece is something we continue to see and continue to have conversations with our clients around. And the cost of everything, unfortunately, continues to climb across the country, whether that's labor, material, importing. Obviously, we have some geopolitical exposures that we're working through as a nation. Those challenges continue to drive the cost of things up. Making sure you're completing a formal review with your insurance professional if you have an operation where you have multiple structures, multiple pieces of machinery, multiple items that are imported from other countries, continents, wherever. Have those conversations around what is this going to cost me to replace, and make sure you understand where your trigger points are. I'd always recommend that you insure to probably 105% of what you think it's worth. The cost to do so, it's not exponentially more. We find a lot of clients for an extra $400, $500, $600 a year, and depending on the size of your operation and scale of risk, it's a very nominal cost to put you in a position where you don't have to worry about it at time of loss. So just something to be mindful of, something that I see, I would say wind, fire, and then ensuring the value, the three biggest challenges for our farm insurance clients at the end of the day. I don't see any questions on that. Sorry, I'm just trying to...
I have a question on insuring to value. Do
Sure.
we have to produce to anybody such as MPAC? And I'm referring to insuring to value. MPAC is supposed to assess farmers on a depreciated value for both the residents, buildings, et cetera, et cetera. And to insure to value is considerably higher than the assessed value that MPAC puts on for taxes. Do they have a right, to your best of your knowledge, to demand to see what our insurance coverage is? I.e., I have a barn. It cost me $100,000 to build it, but that was 15 years ago, so its depreciated value is established at $30,000. Do I have to produce my $100,000 insurance coverage value, or can I just tell them to bye-bye?
So I'll be very transparent, Sheila. My license doesn't. I don't pretend to be an accountant or an accounting professional, but I haven't, in my experience as an insurance professional, I have yet to see MPAC utilize an insurance replacement value for a tax assessment. They tend to be separated in two different entities and calculations. So I haven't seen it. I just want to be transparent that's not my wheelhouse. My license doesn't really allow me to answer that question in a very specific manner. But what I can say is they are two different market spaces, generally utilizing two different calculations. The insurance value that I'll speak to is to rebuild as it stands today, subject to the conditions of your insurance. And again, to my knowledge, and I think we can take this away and review it with an accounting professional who perhaps has the regulatory backing to answer it. I haven't seen it utilized on that fashion, but we'll take that question away and get you a proper answer.
I can jump in. This is a little bit of my wheelhouse, but Ben
Great.
covered it quite well. There are separate calculations, but Sheila, also feel free. I'll put my email in the chat. If you want to send me an email, I'll cover all MPAC and property tax issues for OFA. So happy to deal with your individual issue offline.
Is that Ben that was just speaking, Ben Lafort?
OFA, Ben, yes.
Yes, thank you. OFA, Ben.
Yep.
Yes, thank you. Please do put it in the chat because I will be sending you. Oops, there goes the phone. Thank you.
Okay.
Yeah, good question, and thanks again to my partner in crime here, Ben, who always seemingly has to have the other answer for me. So I appreciate that, Ben. Thanks for jumping in there. The last couple slides, we're nearing the end or on their last piece. I don't see any questions. We do really appreciate these conversations from both Caitlin and I, all of us here at Cooperators. Thank you for everything you do for us. Can appreciate that. It is a it is a wild time right now to be a farmer. Lots going on. It's harvest. Thank you for everything you do for us, our communities, the volunteer efforts that go in. Thank you to our peers at OFA who allow us the opportunity to come and speak to you today. If there are any questions or anything that you feel that you want a different answer or a more extended answer, more intricate conversation, please do not hesitate to reach out to either Ben or Joanne, and they can relay you to either myself or Caitlin or your local cooperators advisor to provide that level of support. I know it's harvest time. I know everybody's getting in the fields. I was out doing soybeans last week, but thanks again for everything you do for us and for all the work that goes into feeding Ontario and the rest of the country. Looks like there's a question there. Jules, you want to go ahead with the question?
Yeah, I'm just going to do it here by voice. Um, Maple syrup producers, I guess, and everybody in the farming industry have their little hicks. Um, we tend to put dumping stations into some bizarre places, and sometimes not worth putting a permit for it because it's such an isolated place. Now, if I decide to cover this, uh, for whatever wind, thunder, bear that comes in and destroys it, whatever happens. Uh, what happens if I decide to put in a claim? Will I be requested to have a municipal permit for building this thing, or how do you cover these things?
It depends. So usually, Jules, what we'd look for is we kind of do that exploratory conversation. What is this? How is it built? How is it constructed? That would take us to the what's the solution. It could be covered as a structure. It might be covered. I'm kind of thinking, is it like a specialized machinery type coverage that we would use? All of it depends on a few circumstances that I'd be happy to talk to you offline about it because I'd want to see a photo. What is this? What does it look like? What are the exposures? And really,
Sometimes, Ben, people will put in a container,
mhm,
but a dumping station is where the sap is being collected. So sometimes
mhm,
at the bottom of a ravine, you cannot bring a container, but you can bring 2x4s and build something that you can put in 10 or 15,000 in there, extractors, and sometimes you'll bring electrical, or you'll have something to make sure you can 2-3,000 taps going in. So
mhm,
it's worth something. And
mhm,
if you don't have a permit in the municipality for this thing, which is usually not worth it because they have no clue what the heck's going to go on there. Um, that's why I was thinking, like, how does that work when you don't have a permit for something like this, but it still is part of your production, right? You can build something that's 10 by 16, which is 160 square feet, which is okay, but sometimes you may have to bit a bit larger if you have to put a large tank in there to collect the sap. So anyway, so are you covered when you don't have a permit like that, or?
As long as it's disclosed to your insurance professional and the building is insured to the value in which it needs to be, Jules, there would be coverage under an insurance policy. We'd always recommend, of course, that you go through the permitting process, but I can appreciate that there are circumstances in which that process doesn't get adhered to. We collect premium on the structure as we deem it. Is the structure that is providing an agricultural purpose? If yes, it sounds like there's an insurable interest in the risk, and we could provide a solution to provide coverage. I'll try and frame it the other way too. Is sometimes you might look at the number that you would be charged for insurance based on the value and say, you know what, I might be okay to take that risk on my own, but I think that's a good conversation to have with your insurance professional, your insurance providers. What makes sense to me? Is this something I would absorb? Is this something I'd want to claim? And go through what that might look like at a more individual level, if that makes sense.
Yeah, yeah, yeah.
Okay, a few questions here. I'm just going through them. Yeah, so Joanne's attached that piece. So we'd always recommend you lock it, Peter. Lock it, keep the keys on you. Things happen is what I'd say. Just keep the keys on you, just a risk management piece. Every wording is different. Make sure you review the parameters of your insurance coverage. Some policies may say that you cannot leave the keys in the vehicle because that would warrant a condition in which the coverage is not paid, but have a conversation with your individual provider, or have a look through your wordings, or reach out to whoever your insurance professional is, and they'll be able to answer that very quickly depending on the nature of your coverage. No insurance for civil unrest or invasion. War is not insured. That is an industry level concern, and that is generally picked up by federal reserves and coverage of that nature. Equipment fire, great question, Brian. Equipment fire, tractor, house insurance value determined depending on if you have a limited waiver depreciation or an actual cash value. You're usually looking at market value. So I'll use the example that we've seen in the marketplace the last couple of years. You bought a tractor, let's say it's 2019, and you got ahead of the curve and you bought a brand new tractor. That tractor in 2025, it might be more expensive than what you paid for it brand new. That's the number that we're going to look for. So that it's actual cash value, that is market value. So if you have 1,000 hours on a John Deere, whatever, that's the number you're going to want to move to. I'd always recommend, just based on what we've seen in the space with cost of repairs, cost of parts, some of the tariff situation and unpredictability there, find the market value and add 10%. And usually that's a quick call to your equipment dealer. Hey, what's this one running for? Oh, it's about, 140. I'd insure it to 155 and be comfortable with that limit. Coverage for injuries to trespassers, that is under your liability insurance coverage. So in the event that somebody comes onto your premises, whether invited or not, you owe them a duty of care. That is the legal case law here in the province of Ontario. There is an expectation of security and safety for those individuals. And in the event that they are injured, that farmer's general liability coverage will play. I would say if you are operating a business, a farm, or producing revenue at your location inside the province of Ontario, that you consider $5 million in farmer's general liability. The cost difference between that and $2 million is sometimes as little as $80, depending on the provider, depending on the risk, depending on the nature of your operation. It's not exponentially more expensive, and the peace of mind that $3 million extra in the bank account to fight those claims or provide defense costs, just well worth it. 80 distance between buildings. I would think that's kind of a mitigation thing, seeing that moves into some capacity conversations. That's a more technical. Every underwriting organization, so every insurer will have a different rule here. And what it does is the further that the buildings are spread apart, the less likely you are to see fire spread risk. So in the event that the hay barn catches on fire, is there an ability for it to jump if it's under 80 feet? So I think the 40 rule is something that we've seen over the last number of years. So within inside 40 feet, you can assume safely that it can probably reach that other building. That's more of a risk mitigation and management piece. We just like to see that through, depending on what the specific circumstances or conversation were around that 80 rule. We'd always recommend to clients, and we've had a lot of really great conversations with clients who've come to us and said, hey, we're looking at building a brand new dairy facility. We're going to attach it to the old one. It's like, well, what about this? We actually had a client who's going to attach. It's a beautiful facility, fantastic operation. They're going to attach their new 50,000 square foot dairy barn to their older bank barn. It was going to look nice, but our advisor and we had a conversation with the individual. We were able to move that building about 450 feet to the left and put it. The client was like, "Oh, I'll put a new civic address on the barn," and they were able to save, roughly $25,000 a year in insurance, because we weren't having to go and find additional capacity in the reinsurance. That's a very technical insurance answer The reason for that is it allows the spread of risk. It reduces the chance that the entire operation will go due to spread of fire. So that's really what that's getting to. It's not a hard and a fast rule. It's more of a guideline and an opportunity for us to help our farm clients build resiliency into their operations and protect them from future loss or future premium increases. Question under insured values. The values double the loss, you split the payment. Depends, Norm. So I'll throw a few scenarios at you on this. In the event that you insure to double the loss, so let's say value was double under insured values. The value was double the loss. I think the big one here. So let's say the building. I'll give you two scenarios. Let's say you have the building insured for $1 million. Your loss is $500,000. We pay up to the $500,000 limit. That's great. That's what we'd pay. In the event that you have a partial loss is where that co-insurance thing comes in. So we'll use the inverse. In the event that the building was supposed to be insured to $1 million and you insured to $500,000, the most we'd pay is 50% of the loss on the partial loss. In the event that that barn burns down, so let's use the total loss scenario. If the barn burns down, you should have insured it to $1 million, but you only insured it to 500,000. We're going to pay you the $500,000 because you're really already self-insuring the other $500,000 is going to take to replace. So it's that co-insurance challenge that I think it was 80-20 comment that we saw earlier in the presentation. That is really specific to partial loss, which I will be very transparent is 99% of losses here in the province of Ontario. It's a roof blows off, a part of the building collapses, a couple animals perish. We knock on wood with some of the mitigation techniques, and again, I go back to my friends at PrevTech, the PrevTech devices. We've seen a strong return on not those large loss fires. They do happen, but not with the frequency they were prior to 2019. So really excited to see those rolling through the coverage. Brian, so that's a specific coverage form here at Cooperators. I'm happy to reach out, and I'll provide my email at the end, and you guys can reach out to that. So some farmers do snow blowing. How does that work for coverage? Depends. So it depends who you're snow blowing for. What are the parameters of coverage there? What does that look like? Depending on where it is. Like you could add it as an extension. You could buy a separate policy. If you're doing it volunteer, like there's a number of conversations that may happen there. Estelle, I'd always recommend that you have that conversation with your insurance professional to have those documented so that, hey, sometimes there's a nominal charge. Sometimes it's, oh, we're doing snow blowing and we're doing multiple locations and they're commercial locations. There might be some premium required there. Other times it's a volunteer effort. And again, we're very grateful for the partnership and the competition we have with our mutual partners, because there's a lot of great solutions out there for you in the event that you are doing those operations, and a little bit more flexibility in the Ontario market. Yeah, I'll share my email here, Carol, at the end of the presentation. I'd have to go back to that scenario, Tracy, sorry. Yeah, and there's lots of devices out there. I use PrevTech. We're a PrevTech family, full disclosure. That's my bias, so I don't want to force anybody into a PrevTech device. There are lots of really great devices out there that enable that monitoring solution, whether that's, sorry, I can't remember the one that we see all the time in the poultry space, but there's the Monitrol solution that exists, as well as the, that's going to drive me nuts. A lot of our poultry farmers operate it, and it has some really great modular additions that can be added to help prevent those large loss scenarios. I don't see any other questions. I know there's a couple specific ones where you might want to reach out to me, so I'll attach my email there. Don't hesitate to reach out. If you have questions, happy to answer them. Thanks again for having us. Again, really appreciate everything you do, and hopeful that we've been able to provide some information and insight. We are hitting the 1 o'clock marker, so I'd like to be respectful of all of your time and what appears to be like a decent day shaping up here in the Eastern GTA. But thanks again for joining us the OFA presentation. And thanks again to Ben, Joanne, and Caitlin as well for having us all here and having the conversation. Really appreciate the questions and your engagement in this conversation.
Thanks, everyone.
Thanks to Ben and Caitlin. Thanks for joining us. Have a great day.